The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at Wednesday's trade action, we saw a solid day in the grains and oilseeds. A nice rebound there, double-digit gains, corn, beans, wheat futures. While we took a little bit of a breather in this red-hot cattle market with some triple-digit losses. A lot of things to take a look at. Oh, and the Fed, they met here this week and wrapped up their two-day meeting on Wednesday. Let's take a look at things. Joining us, Mike Zuzolo of Global Commodity Analytics. Mike, good to catch up with you. And a Chiefs win last Sunday. They move on to the Super Bowl. We were talking about that a little bit before we went on the air. So go Chiefs. My wife is happy because of that as well. I'm sure folks in your backyard are too.
It's pretty crazy. We moved out here about 12, 13 years ago, and we've never seen this kind of win. I came from Bengals land over in Southwest Ohio. So, I mean, between the Bungles and the Browns, I mean, we just didn't get Super Bowl wins like this. So it's a whole different world over here. That's for sure, Jesse.
It is. And I don't know what I'm going to do this weekend without football on, but we'll figure something out.
There is that thing called your family.
That is true. That is very, very true. I do get plenty of family time. I might just get a little bit more potentially. Okay. Fed meeting. Let's start there real quick. Weren't expecting anything major from this Fed meeting. Did we get anything this month, Mike?
No, and it's nice because we had a really nice rally in the grains, and the Fed did not introduce anything, did not disrupt anything. One of the very few Fed meetings where we can walk away and say the commodity markets really didn't get any impact from the Federal Reserve. In fact, they're taking more of a back seat because they're waiting for President Trump to do what he's going to do on February 1st or not do on February 1st as far as tariffs to our North and South American trading partners and those on the border. I think the other big point to make here, Jess, is, and we'll talk more about this when we talk tariffs, is overall when I'm saying to clients, and this fits into the Federal Reserve commentary today about the inflation remaining elevated, and they took away the term has made progress in terms of the inflation making progress and going down. They're waiting because in part because of President Trump, but also in part because the inflation's remaining too elevated. I think that is supportive of the idea of what we talked about, that funds have probably come in and bought hard assets and rotated into commodities, invested in commodities to protect their portfolios from real asset inflation. And this goes to the heart of whether President Trump does anything on the tariff side or not, as far as if he does whack Canada and Mexico with 25% tariffs from the get-go this weekend, early next week. The biggest fear I have is the dollar shoots back up sharply higher, and that unravels that fund investment, or could unravel a good chunk of that fund investment. So that needs to be made really, really clear as we talk through today's program.
Okay. All right. Well, we're going to get to tariff talk here in a little bit, as you mentioned. I do want to start with weather and wheat. Wheat was the upside leader on Wednesday. Talk to me about what you saw in the wheat trade here Wednesday, and rope this in with some of maybe the weather concerns that are not only South America, we're going to get to that in a second, but impacting wheat here specifically.
Yes, and it's nice because some of the stuff we've talked about is coming to fruition. In other words, the wet weather that was expected in the U.S. hard red wheat belt this week is not happening nearly as much in the models. And so now we're right in the heart of the rain systems on Wednesday night, setting up for whatever we're going to get this next week and a half. And this comes on the eve of the next drought monitor. And this is last week's agriculture and drought monitor for winter wheat. And we noticed that even though we're above last year for this time by, I think, a percentage point for the whole country in winter wheat, our top 5 states, our top 6 states are really not suffering that much at all. But those are the states that could be seeing above normal temps, below normal precip the next 20 to 30 days. Throw on top of that the fact that I think part of the reason why the wheat led and the meal led on Wednesday, which were 2 critical factors we've talked about between on our program, is the Argentina's back in play, and I think there's your soy meal market. Wheat's back in play, thankfully, because in part of the Black Sea, and they are tightening in terms of supplies by the latest data and what we're hearing from over in that part of the world as well.
You mentioned South America. Here's a Argentina Vegetation Health Index map that we're looking at on the video feed. But walk us through some of the latest you are hearing from your colleagues in South America and what we're kind of examining right now.
Well, a week ago, I was starting to feel as though we were going to move away from the Argentine weather market and move towards the center west Brazil weather market in terms of not getting soybeans harvested and getting safrinha corn planted. That half of my analysis is correct. The half that is not correct or was not correct was the rainfall and the heat that we saw the past 5-6 days really didn't do much good in terms of how the crops look right now in late January. And this map shows very clearly the vegetative health index of the key areas of Argentina's corn belt and bean belt this year on January 21st versus last year. And you see a night and day difference. Red essentially means you are losing your crop at this stage. And this matches up with what we've been hearing now in the middle of this week from both South American colleagues and also professional weather people. And so now we have both Argentina still on the table, and we're introducing the fact that Mato Grosso right now, last number I got was they're about 4% harvested in soybeans versus 22% a year ago. That's putting them at about 1 to 2% planted on safrinha corn versus 10 to 11% a year ago at this same time period. And now that we're getting into February, you're kind of in crunch time with the safrinha corn. You got to get caught up. And some of the weather forecasts are suggesting it will dry out, but not enough to really get caught up. And so we've got these two on the front burner issues as far as the corn. And that's why the corn, I think, between Argentina and Center West Brazil, with wheat supporting it nicely, was able to make another 15-month high on Wednesday's trade.
That's a great point. Great point. And you mentioned good support from wheat. I just want to take a look at the HRW monthly chart and a pretty defined wedge formation we're seeing there. Mike, walk us through this.
Yeah, we've been looking at the soft red wheat, where I think the fund business is most important in terms of funds being net long, net short, and where the big money is going to probably play because the volume in soft red so much greater than hard red, and open interest is as well. But the hard red and soft red look nearly identical. Again, one of these charts that you could, make a template of and look at several charts, whether currencies or wheat. It seems like a lot of things coming together, technically speaking. And when I continue to see this, Jesse, and I see this potential buy signal in the stochastics at the bottom of this chart and a new 3-month high in the hard red wheat, two things come first to mind. And that one is, we don't want to stop here. This should be the beginning of a move higher. We don't want a sharply higher dollar and tariffs to come in and disrupt this breakout, because it's been hard fought, hard earned. And the second thing is, now we've got a line in the sand we don't want to go back below, or it really unwraps a lot of the good that we've done. It takes a lot of the great momentum away from us if we would happen to go back down towards that 525, 530 level in 520, 515, whether you're looking at hard red or soft red.
We are talking today with Mike Zuzolo from Global Commodity Analytics here on Market Talk. Mike, talk tariffs. And again, you mentioned this now a couple times. It's something that we've been paying a lot of attention to, wondering what we could see. A lot of the talk is that we are going to see tariffs on Canada and Mexico by this weekend, by Saturday. It's been a lot of the indication here in recent days from the administration. So looking at this a little bit more, kind of set this up for us as we segue over to corn, beans, cattle, et cetera here, just what we need to pay attention to right now.
Well, I think number one, Jesse, is the more favorable tariff talk on Wednesday put to bed some of the fears and allayed the fears that you're talking about coming up this weekend. And that allowed the full force of the weather shifts all around the world to really impact the commodities and impact the grains on Wednesday. So we get a taste for how important the weather is and the timing is here for the supply and the production side. This headline from from Reuters matches up and even kind of is secondary to the headline from Bloomberg that we aren't showing today, in that the president of Mexico herself said that they don't expect tariffs on February 1. Canada, some of their key tariff negotiators, said also on Wednesday they don't expect tariffs on February 1 because they think they're making headway with the fentanyl issue and with the immigration issue that President Trump has put front and center, and that his Commerce Secretary designee Lutnick has once again said and reiterated during his testimony to the Senate committee for his approval. Mm-hmm. And so I think we're getting from a hazy picture more to a more focused picture, that it really is about the issue of the fentanyl and the immigration, and that if President Trump feels that there is enough movement in the right direction on that, then we don't have to have tariffs this coming weekend. And I think the market really was supported by that. Now, having said that, I think there's a couple things to talk about. One is the Mexican corn production and its imports were changed by the ag attaché just a few days ago. Production was lowered due to drought, and their imports were actually increased substantially from 24.5 million metric tons to 25 million metric tons. That made me think that, and you look at the big picture now of what's happening in South America, what's happening in the Baltic region, and then you think about the real key to the tariff issues, China, their negotiating power goes down as the weather stays rough in terms of supply and production for Latin America and South America. And we can see that in Mexico as well. I would say it'd be very unlikely at this point Mexico would try and slap counter retaliatory tariffs on us when it comes to corn. They did say, however, on Wednesday that they are forming a list, and that list did include pork, included grapes, included whiskey, but pork was really the only ag sector that you and I talk about right now. So again, we're getting more of a streamlined, focused opinion and outlook now as far as where these tariffs may lead us.
Okay. All right. I want to weave in another piece here that I know you wanted to make this point here today, and you mentioned corn earlier. Some really good, impressive movement on Wednesday. Over $5 in old crop May and July, getting new crop December futures to 466, almost 467. But you made the point to me that cash isn't leading the futures anymore in corn and in cattle. We're going to talk about that in a second. So first, why do you feel that way? What are you seeing here in the corn market, Mike?
I think the main reason why the corn and the cattle have been so resilient is because A, they have tight supplies, but it's also those tight supplies are being met with strong demand. And you've seen that in the cash market the last 6 months. And look at where we've come from the August lows when we were talking about going back down a whole nother leg led by the soybeans because of the massive soybean supply and carryover levels. And I remember doing meetings last August saying we shouldn't need to go down at all in the wheat or corn, but it's the dollar and it's the soybean carryover that makes me nervous about the wheat and the corn. Look at what we've done as a result of these tightening supplies and the USDA supporting and confirming these tightening supplies. And so what I'm going to make the argument here today is we've seen the cash-led market feed the fund-led market. We don't want the cash-led market to go away. And as you said, both in corn and in cattle, we're starting to see a trepidation or a little bit of a wobbly market in the cash. It may mean nothing because it's 1 or 2 days, but if it's a week or 2 weeks that we're dealing with this, that could really spur, I think, some fund liquidation. So we really got to be on point here. And this goes all the way back to the beginning of our conversation in today's show, Jesse, and that goes back to if those tariffs are put into place, maybe Mexico won't go ahead and retaliate on corn. Maybe Canada won't retaliate on ethanol. But what does the dollar do? And what does the dollar do against the major emerging market currencies? And then what does that do to the cash market and this cash/fund-led drive in this corn market? And I think this is really important to stay on top of because we don't want to see the cash premium erode that much more to the futures. It's about 60 cents now that the cash is over the futures. You get below 50, 45 cents, I would be very nervous that the top in the futures is probably in.
Okay, let's flip over to cattle as I want to keep on this same theme here. This is a chart looking at cash cattle versus CME futures. And, you know, market's been red hot. Futures took a bit of a breather Wednesday, and cash, we're still kind of waiting to see what this week's cash trade looks like. So I know we're just getting at some very lofty levels here, Mike. So on the cattle side of this thought, what are you watching right now?
Yeah, when you see a parabolic or straight up move in these markets like we're seeing in the cattle and the market's not letting off the gas, it really is, in my opinion, a market that's trying to put in as much bullish information or expectations as it possibly can, and that draws us to that January cattle report that's coming up here at the end of the week. It's really important that beef cow inventory number is at least a couple million head lighter than the 28.2 that we saw last January. But I think one of the things that dawned on me this week is the amount of fund-led, record-breaking net long positions in feeder cattle probably cannot be over spoken about in relation to the screw worm and the tightness of the feeder cattle market since the later part of November. And I think we really kind of have to just stay with that situation very carefully, because at some point that Mexican border is going to open up. And are you going to be hedged before it opens up, or are you going to wait for a significant potential pullback? And this is where the cash fat cattle market has been the most accurate depiction or canary in the coal mine for where this fat cattle market futures is going to likely go. I've hit my swing objectives of that 207 area that we talked about last week. And I think this is just one of those cash versus futures markets like corn that we really want to be on point and be ready that if that 203 doesn't springboard back to 210, 212, 215 by the end of this week, and then we get that cattle inventory report and it doesn't show anything bullish, what will the funds do? And I think that's what we got to ask ourselves before the fact.
I want to take a look at one more chart here. This is the monthly live cattle continuation chart, and just looking at the defined channel here as well. I think this just adds to some of your point here at cattle, Mike, that, you know, we've had some parabolic moves and we just got to be ready to go and be on point, as you said, in this market.
Yeah, I mean, you see those two white hash marks we talked about last week. That swing objective has been met by getting above 207.50. The only swing objective I can see now is the top of that channel, which is probably around 209, 210 plus. But this is where I'd rather sell into a rallying market than play defense and get hung at the top, because we know how the trade psychology affects us oftentimes. When it goes down sharply, we say to ourselves, well, let's just wait because the cattle market always comes back. Well, I remember saying that in 2014 and 2015, and some guys calling me and saying that when I was wanting to buy some puts. This is a tough market because of HPAI. It's a tough market because of China and their weak economy. It's going to need to be fed as far as the bull here at these price levels. I think I can say that, and whether it's the report or a continuing weakening dollar, but what happens if the dollar shoots back up and we bring more imports in? That cattle on feed report really showed us we are not tight on supplies yet, especially with dress weights upwards of 35, 36 pounds higher than last year at this time.
Great points. Mike, anything final you would share or reiterate with folks here today?
Expect more volatility, not less, Jesse, in these next 2 weeks, because we have a lot to go through, whether it's weather or trade and policy, and who knows what we're not even thinking about right now. So formulate a plan and don't cancel if close on orders that get hit or you think should be hit. Just maybe pare back your number, but don't throw out your marketing plan if it's profitable.
Great thoughts. If folks want to reach out to you, take a look at your analysis and more, I know they could do that very easily. How can they reach you, Mike?
Globalcomresearch.com. It's globalcom with 2 M's, research.com.
Fantastic stuff as always. Mike Zuzolo, Global Commodity Analytics. Good to hear from you again. Have a great week. We'll talk to you next week.
Thanks, Jesse. Appreciate you having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.